The Nigerian government is yet to resolve how it plans to securitize its huge 23 trillion naira ways and means borrowings obtained from the central bank. But what are the dynamics of government borrowings via ways and means, and by extension, the entire public finance system? Discussing this with me now from Abuja studios is Kelvin Emmanuel. He's a policy analyst and the CEO at Dairy Hills Limited. Great seeing you, Kelvin, for the first time in the new year. Thanks for coming through in our studios.
So much, and Happy New Year to you too.
Thank you. How are you? I hope you're doing well. So let me just get on with this. Tell me, what are the fundamentals issues for you as an analyst regarding Nigeria's excessive borrowings via the central bank, or what is called the ways and means?
Well, to be honest with you, what is interesting for me is the fact that since the ways and means provision was created by an act of parliament in 2007, what is interesting is that between 2007 and 2015, two presidents borrowed only 869 billion from the central bank. And between 2015 and today, one president has taken 23.7 trillion naira from the Central Bank of Nigeria. And what is of concern to me is how ways and means has influenced the direction of Nigeria's fiscal position. You can see that in the 2023 Appropriation Act, the sinking fund is 6.5 trillion naira, and the interest that the government is going to have to pay to the CBN for the ways and means overdraft is actually 1.2 trillion. So, you know, it's really of concern on how these advances affects currency devaluation and depreciation, given that the monies that are advanced by the Central Bank of Nigeria are actually not backed by any foreign reserves, and how that is informing exchange rate driven inflation, and how that continuous inflation that we currently have at about 21.34% for core and about 23.7% for food inflation is affecting the rise of the MPR that has gone up by about 600 basis points within the last 10 to 12 months, and how as the exchange rate, as the MPR goes up in the attempt to align inflation to interest yield curve, capital becomes more expensive, production contracts, and you also have not just cost push inflationary buffers, you also have demand pull inflationary buffers. So these are the issues that are of concern to me as it regards these ways and means.
Okay, so why do governments need to borrow beyond threshold from the central bank or from bilateral, multilateral agencies? Is it just basically because the economy is not doing well? Is that also?
Well, obviously Nigeria has a revenue problem because the revenue, both for the tax and non-tax revenues, are 7.4% to GDP. The emerging market average is somewhere around 16 to 18 to 20%. Nigeria needs to increase its revenue to GDP ratio, but it also has an issue with expenditure on how it spends money. You can see very well that the cost of running the government is about 1.1 trillion in 2023 Appropriation Act, and very much so for MDAs that do not get to expend all the allocation that is given to them. They do not usually remit these monies back to the General Reserve Fund as provided by sections 20 and 21 of the Fiscal Responsibility Act of 2007. So it has a huge problem of the government increasing budget total without actively raising the revenue to GDP ratio. But it also has a spending problem. And the spending problem of the Ministry of Finance coordinating all the other areas of government, not presenting the books of how the monies were spent and the performance of the budget at the end of every fiscal year to the National Assembly before any new appropriation act is generated and presented as a proposal for passage, like they've done with the 2023 Appropriation Act. Okay,
so we've got a problem on our hands. How do you think this can be resolved, and how quickly should we do it?
There really is no time. In my view, I don't think the 2023 appropriation is realistic, and the reason is because, last week, Moody's Investor Service, they placed Nigeria on watch when they downgraded the foreign currency issuer rating from B2 to B3 in October 22nd, and the local currency issuer from B1 to B2. they placed Nigeria on watch. And last week, they finally downgraded Nigeria to CAA1, which is actually in junk status territory, and is 30 steps above the lowest rating of C. What is very interesting for me is that when you juxtapose Nigeria's fiscal situation with Ghana, and you realize that Ghana has a debt to GDP ratio of about 81%. Ghana has the fourth largest, fourth highest credit default swaps rates in the world, that's somewhere around 2,400 basis points, 24%. You see, Ghana has a Moody's rating of B3, for its foreign currency issuer, which is actually a step higher than Nigeria's CAA1.
Yes.
So I'm concerned because in the 2023 Appropriation Act, you realize that you have recurrent debt that they're expecting to borrow up to $20 billion or the equivalent of about 8.8 trillion naira to cover somewhere around 10.6 trillion naira of deficits in the budget. I'm wondering how they are going to raise the money, because when you look at all the funding sources, you look at the revenue, you look at the fact that the multilateral partners and bilateral partners like the World Bank, the AFDB, the IFC, like the bilateral partners it has, the government of Japan, the government of Germany, the US government. When you go to your bilateral partners, you have to give them diplomatic concessions, economic concessions, which is not exactly good for Nigeria. You look at the domestic bonds market, you realize that the domestic debt stock is actually, the bonds market is 730% of the domestic debt stock. I don't expect that with the current credit rating that Nigeria has, that poses a risk to companies also, that is going to be able to get 7 to 10 year bonds priced at below 20%. How do you want to sustain that?
Kelvin,
so these are my concerns.
Kelvin, look at Ghana. You just mentioned Ghana. The stock market there today jumped more than 2% because this whole Ways and Means, $3.3 billion of the Nana Akufo-Addo's administration got the approval of the parliament to securitize it. So is there any lesson there for Nigeria on how quickly we need to resolve this and move on without necessarily passing on an unresolved, a very big issue to the next government, to the next president, to the next administration, and for Nigerians to continue? Because the government is a continuum and Nigerians is also a continuum.
I finally accept that we have to move on. But here's what. We need to be very careful on how we decide to move on. It's very important that in moving on and in getting the National Assembly to securitize Ways and Means, they are proposing 9% with a 3-year moratorium, which I don't think any sensible investor will want to buy, to $30 billion of debt with a 3-year moratorium, especially considering the fact that Nigeria has an external debt stock of $39.6 billion, that's about $11.6 billion higher than Ghana's external debt stock. It's important that we proceed to securitize it. Ghana has at $30.3 billion, which is about 336% higher than its revenue that it generated for 2022 at $982 million. But in proceeding, it's very important for us to pay attention to sections 38. Sections 38, 1, 2, 3. It's also important for us to address the issue of a debt ceiling, so that in the future going forward, the CBN will have to come back to the National Assembly anytime it hits that ceiling, and it has to go beyond that ceiling to explain. The ceiling is 5
minutes. Respectfully, Kelvin, the threshold is 5. Should we just go to the National Assembly, just say, look, let's move it to 10%, or any figure that's higher than that, so that we just resolve it once and for all? Moving it to 10% is actually not a bad idea. The issue is the government willing to pay? Because the law is very clear in Section 38. It says that you have to pay back your advances that graduates to become overdrafts after 3 months within the financial year, for you to be eligible to collect for the next year. That's the issue. The government does not pay it, accumulates it, and it compounds the interest over time. That's the issue. So even if the Senate decides to amend it and say, okay, you're moving that limit to 10% of real revenues for the previous accounting year, the onus now falls on the government on, are they willing to obey the law to make sure that they pay back the advances or overdrafts before the end of the financial year for them to qualify for the next year? That's the question we have to address. Right now. See, look, we have about 4 months before the next administration comes in. So we've got to do something, my friend. We have lost so we've got about 120 days or thereabouts, roughly speaking. So we need to deal with the existing Ways and Means. Then we need to find a way in which the next administration has something better to work with, because it looks like the 5% threshold is no longer feasible, which is in the act.
Yes, you know, going forward, I expect that the next president, I don't know who the next president will be because it's obviously going to be very close elections.
I have no idea who the next president will be.
Well,
I just want a situation in which
have
this wasteful expenditure and insufficient revenue dilemma, that we're able to deal with it moving forward. See,
Nigeria has a comparative advantage with gas. Okay, Nigeria needs to increase its gas capacity utilization from the current 32% somewhere to around 50 or 70%. And then for them to achieve that, they need to get NNPC to the markets, obey the Petroleum Industry Act, privatize a part of NNPC like Saudi Arabia did with Aramco, raise revenue.
What part of NNPC? What part of NNPC would you want? What part of the NNPC, Kelvin, would you want to be privatized or to be sold off? What would you suggest?
NNPC is a private company. For example, cash calls should not come from the federation account. It should be from the markets. If you send NNPC to the public as an IPO, you can raise revenue by selling 5, 10, or 15%. But you need to move. You need to move the NNPC to become a PLC first. You can't sell it as a limited liability. You need to move it to a PLC status. Yes. There is a process of discovery and book building that the investment bankers will do.
Yeah.
And this was what Saudi Aramco did in 2019. Mm-hmm. It's a process that they can only do if the federal government leaves the apron strings and allow the NNPC to run as a company. Allow the NNPC to run, appoint a board with cognate experience, appoint a management team with cognate experience, conduct business transformation or business process reengineering, and set a target of 6 to 12 months to get the NNPC to an IPO, to raise revenue to fund your LNG projects. Nigeria has 49% of the joint venture agreement with IOCs in Nigerian Liquefied Natural Gas Company. And what is interesting is that between 1999 and 2015, the Nigerian government earned 35% of the $85 billion the NLNG earned as revenues in dividends and taxes. So if you've gotten $30 billion over the period from 1999 to 2015 and you have a cash cow, why don't you increase the capacity of NLNG from 22 million metric tons per year to somewhere around 50 million metric tons per year, considering that with the whole issues in the Baltics, the price of 1 ton of LNG is currently $150 per ton. There is a comparative advantage there.
Let's see how it all goes. But again, this conversation is not over yet. Let me just tell you that, Kelvin, because we have a whole lot to talk about. Thank you very much for bringing your thoughts to the table tonight. Thank you very much. Have a great week ahead. Kelvin, Emmanuel, policy analyst and CEO at Dairy Hills Limited out of our Abuja studios. Thank you so much.